kind of addicted to credit and addicted to like having the best credit score. So I did a sheet years ago. It's called Improving Your Credit Score. And this is always so fascinating to me. It's a little box that says the FICO model dynamic. So here's what basically that says. All credit score is a probability of default. What is the probability that you're going to go bankrupt and default on my loan? Because that's all I care about if I'm your mortgage company. Do you know that a credit score of 801 yields 1,292 good loans for every bad loan? An 800 credit score. I mean, if you're in an 800 credit score bucket, you're in the top 10% of the United States. Here's a little national distribution of FICO scores is on there too, and you can kind of see where you sit. Inversely, if your score is, say, 601, I think it is, if your score is below 601, 600, every time 8 loans are written, 1 will go bad. 1 out of 8. That's 17.6% probability of default. So if I get, that's terrible investment, right? So if I invest $100, that means I'm probably going to get $86 back, and that's the probability statistic. And back in 2007, 2008, we were giving these loans out, 580 credit scores with 1 day out of bankruptcy with no money down. Like, dude, you're asking for trouble. And then we were hiding them in A paper and saying, these are good loans, these are A+ paper, and selling them to guys in Abu Dhabi. And so then when these loans started going belly up, it's no wonder, because we were hiding bad loans in good paper. And then that kind of started the freak show. So anyhow, I find that that's a really interesting, because it helps me mentally like understand like what's the big deal anyhow between a 640 and a 600 credit score. It is all about risk probability statistics. They're not trying to rip you off, but there's more risk associated with the risk of default if your credit score is lower. Otherwise, these are some good stuff on the top right. It says it's a mix of credit. So there's different things that go into the mix of credit, your payment history, your length of credit. So sometimes, I could go all day with this kind of stuff. An installment loan has better credit score results than taking a revolving credit card. So I had a client before that had a bunch of credits to consolidate, and she said, should I do a 0 interest rate credit card at $20,000 or should I take an installment loan? And it was way better for her to do an installment loan to consolidate those items, and her score went up immediately. It was pretty cool. So an installment loan has a better risk rating than credit cards do. I could answer any questions on credit if you want them. I figured that this is a good document to start with to read. Fallacy. It is not true that getting one hard inquiry on your credit will hurt your credit score. If you have a 601 credit score and you can't go below 600 and 1 point will ding you, maybe. But it's very unlikely. The other thing is what's changed in credit score modules is they have any type of finance company, they pull it for 30 days. You can have pulls, multiple pulls, and it's seen as one pull. So the risk of a credit pull, because you're fearful that somebody, like if I were to rip you off with fees and closing costs, and you're afraid to leave me for another inquiry, don't be afraid. It's one inquiry. It's not going to impact you as much as somebody ripping you off will impact you. Does that even make sense? So there was something else I was going to say about credit and pulls. I don't know, it'll come to me. So, questions on credit. I'm going to give you some examples of how I've helped a couple clients and what the kind of things that I do. And finishing up, because I'm sure it's 6 o'clock or 7 or whatever time. So Savannah came to me. This was a little bit older. I told my Denise that we need a couple new reports so they know that I'm still doing this kind of stuff. So Savannah, we just have blacked out these documents and we keep using them. At the time, in June of 2017, the minimum credit score requirement was 620. You had to have a 620 credit score to go FHA. Now you have to have it's 580. So she came to me with an offer accepted from being denied at another bank because her score is sub 620. If you notice, it says potential score improvement plus 32 points and plus 22 points. So I imported her credit report into a credit analyzer that I have, And it tells me exactly what her score, what she can do to improve her credit score, and how many points it will get her. So 4 pages in, it's on the back side, it's called Credit Plus Score Wizard on the top right side, top left side. And it says that Savannah would get 22 points if she spent $1,100 doing so. And on the next page, it tells what to do. By paying her Bank of America card down to $112, it would improve her score 22 points. I had a client before that had a brand new collection that came up right before closing. We had to do a soft credit pull. 5 days before closing, it dropped their score to below 580. We were mortified. The loan was dead. So he's like, I'll pay off the Verizon, I'll pay it now, and on Monday you can do your rapid rescore thing, and my score will go back up. I said, hold on, let me evaluate this. I imported the credit report. Paying off that Verizon collection did nothing. It didn't bounce back their score at all. But they had a little credit card. They had a balance of like $180, and paying it to $10 bumped up their score 50 points. So they did it. I ordered a rapid rescore, which I'll explain. 5 days later, 5 business days later, had a score higher than what they had before the collection, and we closed within 2 weeks of that whole debacle. So there was something I was going to say about the credit. It came to me and that left me again. All right, I'll come back to it. So $112. So 0 is not optimal sometimes. Usually having a little balance like $10, $20 is usually optimal for credit. Having 0 is not usually optimal, especially if you've got credit and you're trying to build it, if you're trying to increase your score. So she did it. The next page tells you that because remember there's 2 bureaus, right? They're different bureaus and they might say different things. So I did the same thing with Experian, and it said that she would get 29 points if she paid her Bank of America card down to $237. So I told her pay it down to at least $112, but not 0, but greater than $112. So she did it. And instead of waiting for 30 days for her credit to update, because every 30 days credit reports are updated, I took her proof of her payment. She had a new statement with a new balance. She got a generated statement, and I ordered a rapid rescore. So within 5 business days, she had a new score on July 6th of 639 with Experian and Equifax. So we didn't even lose a beat because I made application as if she had a 620 score. I ordered the appraisal. We got the appraisal and title work in, and I already had her application documents. And so we were like a week off because I had to wait 5 business days for the score to come back. I couldn't go into underwriting with a failing score because it's an automatic denial. And underwriters, and they don't really want to see that you're rapid rescore, that you're rapid rescoring a person. They don't want to see old credit report, new credit report. So you kind of do it and then turn in the final product. You just don't turn in the, underwrite this file even though the score's not there. You can't really do that, if that makes sense. So she closed, and she closed on time. I asked the client, the agent, to give me like 2 extra weeks on contract, and they did. And we closed in the same month in July. So if your score is not where you want it to be, the moral of this story is there's tools that I have that will tell us how to improve your credit score. Like the gal today, that she was not qualified for Mr. What's that program called? Step Forward. And I said to her, eliminate yourself from this credit card and your score will go up. And she was like, well, what if I pay off these collections? Do I need to pay off these collections? I'm like, FHA's not telling you have to, and you want better credit in the long term. So yeah, you only have a $200 collection, a $400 collection. Definitely. They're non-medical, Comcast and AT&T. Yes, because you want to have great credit, right? So Wambui came to me, one more case study. Wambui came, and I'm wrapping up. This is about my last document. And she was so sweet. Her and her husband are both doctors, and they wanted to buy in Troy. And it was very important that they bought in the zip code, I think it was 48084 in Troy, because of their son and going to school in a particular school in Troy. So when you get into and they were buying a loan that was over $350,000. FHA's loan limit is $300,000. So when you get into bigger loan amounts and you can't qualify for FHA that has more leniency on credit scores, on a conventional loan, credit score is everything. you will be taken to the cleaners on PMI insurance and your interest rate if your score is below 680. And even at 680 to 720, it's more expensive conventional than FHA. Because FHA is a government loan, so everyone gets the same PMI insurance regardless of credit score. If you qualify, you qualify. And generally speaking, you get the same interest rate if your credit score is 800 or if it's 620. So you're not rewarded for real high credit, but you're not penalized either for not so good credit. So the first thing I did was I removed her husband from the loan because Wambui's credit score is over 680, but his is not. So that was strategy number one. They're both doctors, they both make plenty of money. So you notice on their scores it says that there's no room for score improvement. Her PMI insurance was going to run them $450 a month for a $350,000 purchase price, given the score of Wambui. So I didn't want to scare her. I pre-approved her for $350,000, and I ran a what-if simulator. And it told me that I tried it at 3 months, at 4 months, at 5 months, and at 6 months. It told me in 6 months, if she kept her credit cards to minimal, then her score would go up above 760. So I said, Wambui, if you can keep your balances under like $300 and time passes, and you haven't found a house yet, I'll run your credit and we'll see where you stand. So she calls me frantic in July. This was March, right? So if we can go to the very last page, and you can review this and kind of look at her score, look at the differences later. But she came to me in July frantic because she found this home that was over $400,000 and she really wanted it. And it's now July, and they of course have been looking for months. They started in March. And so I said, Wambui, did you happen to do what I said about your credit? And she says, oh yes, Dawn, of course I did. She's sweet. And so I said, can I rerun a new credit report? All this time I've just been updating her approvals and not running new credit. I've just been letting it kind of continue to get established. So she said yes. So I ran the report on July 22nd. I think it was a Saturday or Sunday. She called me. And her score went up to 761. 761. So that meant that she was in the top tier now. So she had the lowest PMI insurance and the best interest rates just based on her new credit score of 760. So her PMI went down to $180 a month from $450, and her interest rate improved. She was able to buy $50,000 to $60,000 more house with the same payment as that $350,000 home because of those improvements. So I know it's getting loud in here, and I'm about out of breath. Is this helpful? Is there anything else that you would like to learn or know that we haven't touched on? It becomes really real when we get to sit down and work through payments and out of pocket, because we'll go through and we'll figure out, okay, where do you want to be ideally for your house payment? We start with that. And then I figure out how much house that is with taxes and with insurance. And then we do a what's the lowest price house you think you might find? And then what's the absolute highest mortgage payment that you would say that you would feel comfortable with paying? And you tell me, you say $1,200. I say, okay, if you found the right house and the payment was $1,250, would you tell me no? And you don't want the house? Most of the time, oh, maybe, I don't know. Okay, what about $1,300? No, definitely not $1,300. So then I'm like, okay, so if I have you approved for $1,275, I've over-approved you, right? And then we just talk through those numbers, like how much house that is, how much house that is, and how much house that is. And then we see how you qualify for MSHDA. Do you qualify for conventional with 3% down? Do you qualify with more down? Does it make more sense? One last story, I had this gentleman come in, he had a pre-approval with Chase, and he was so hell-bent that he had to have a rate, this was about a year and a half ago, of 4.25%. And I just looked and he's like, can you match my rate? I said, that rate on that pre-approval means nothing because you don't have a house, you don't have an offer accepted, and I could put a rate of 3.75 on the approval. Your problem is your credit score is only 680 and it's impacting you, and I can see you can go up 50 points if you just do these two things, and then your PMI insurance will be $80 lower and your interest rate would be probably your 4.25% anyhow. And so he was like, okay, how do I do that? And so sometimes we get hung up on, because we don't know what to ask, so we just say, what's your interest rate? The key is there's a way more than interest rate. PMI insurance is more, I'm more scared about PMI and what that means. Am I paying it for the life of the loan? And like what's the hidden stuff? The interest rate's so right there, but it's the other stuff that can really drive up your APR or your fees over the life of the loan. So.